Very good afternoon, everyone. Uh, I, Dr. Jamal Abdul Nasir, working as assistant professor in the Department of Commerce in Data Ministry, Lucknow. Today, we are planning to discuss with you the concept of accounts mechanics. So, uh, this video I have made for Center for Distance and Online Education in Interior Ministry. So the lecture of the subject computer accounting, computer oriented financial management, the course code of this subject BCA 402, which is going to be presented by Dr. Jamal A. Abdul Department of Commerce, Interior Ministry. So as I told you that accounting mechanics means accounting is what a systematic and institutionalized branch of in business, right? Commerce. The main motive of this accounting is just to record the financial transaction in a chronological order in a systematic way with the following rules and regulations of the accounting without violating the fundamental doctrines of accounting. So when we're talking about the accounting, it is a means we have a specialized skill of recording the financial transaction. Right? The books of accounts is prepared for a purpose of decision making. So it's have lot of it required lot of managerial skill for the purpose of accounting task, for the purpose of accounting work. So in these lecture, we will plan to discuss with you all the concept of accounting, the core of accounting, the double entry system, the financial explanation, the role of debit and credit, accounting principles, the importance of auditing, tax accounting basics, cost accounting insight, budgeting as a tools for the decision making purposes, technology in accounting, ethics in accounting, accounting for non-profit organization. Similarly, this lecture also will be emphasis towards international accounting standard, the evaluation of accounting, future of accounting, and the last slide will be with you all. That thank you. So when we're talking about the concept of accounting, the core of accounting, now try to understand that accounting, why it has significance, why it play vital role. As I told you that these in this present era of highly sophisticated technology, AI, ML, business doing business is not a easy task. You require to emphasis toward all the aspects of the business, and accounting serve as the backbone of any business, recording and summarizing the financial transactions systematically. This is only what accounting, which emphasis toward the accounting. This is what the accounting which provide a backbone, a support, an assistant it can work for the purpose of recording and summarizing the financial transaction systematically. Its primary purpose is to provide the clear financial information that aids the decision making for stakeholders at all levels. Doing business is not an easy task. In this present era of highly sophisticated technology, the stakeholder want at every step all kinds of clear financial information for the purpose of decision making, that how to invest, how much amount, what was the quantum of the amount to be invested, what about the tax regulatory of different countries. So understanding this mechanism is crucial for effective management, investment decision and strategic planning. Without proper knowledge of the accounting, we are businessman is unable to control their business, always in dilemma as to what make an investment decision, make or buy, and similarly can't plan for futures. So in these lectures, the core of accounting, we were talking about the crucial for effective management, investment decision and strategic role. When we're talking about the concept of the accounting, accounting play a very vital and very significant role in business for the purpose of decision making, That is why it provides a clear-cut guideline that how the transfers should be recorded. This foundational knowledge empowers business to thrive in a competitive landscape, ensuring sustainability and good and growth. Means based on these fundamental doctrine, business based on these fundamental doctrines of accounting, books are prepared, and accounting help at every turning point of the business, at every step of the business, that whether to either to invest, either if you're talking about the investment decision, if you're talking about the strategic planning, if you're talking about anything else, right? So this covers and is accounting, banking, supporting business, support one kinds of supporting activities to the business, and based on this fact and figure, business is always taking the decision. So the core of accounting about this. So when we're talking about the system, every business has unique systems, right? Every branch, every discipline, every branch of education has certain system. If we talk about these medical sciences, we talk about these applied sciences, we talk about yeah, paramedical sciences, we talk about these sciences, yeah, pure sciences, right? So every discipline has certain rules and develop certain system. Same way in the domain of accounting, we have double entry system. As its name clarifies, double entry systems means what? The double entry system, a hallmark of the modern accounting, ensuring that every transaction is recorded twice. Every business have every transaction have two recordings. First, every debit have credit and every credit have debit. Right? So when we're talking about the double entry system, we mean here that asset is equal to liabilities plus capital. For example, in order to understand double entry system, let me take one of the example. Purchase goods amounted to rupees 10,000 from XYZ private limited. As of now, just I told you that in this scenario, as I just told you that in accounting, these method maintain the accounting equations means assets is equal to liabilities plus equity, right? So in the given example, just like I told you that purchase goods amounted to rupees 10,000 from XYZ private limited. Here as in my previous lecture, as I told you, generalizing rules and regulation, classification of accounting. So in these case, at how to maintain the accounting equation means assets is equal to liabilities plus plus equity. In the given example, purchase goods amounted to rupees 10,000 from XYZ Limited. Here the increase in the asset, and the asset is what inventory, and here these transaction took place not on cash basis but on credit basis. We have purchased the good from XYZ Private Limited, which is what the creditors of the business, the creditors means from where we have purchased the goods. So today or tomorrow we need to pay the amount of 10,000. So in this case, the accounting will be the accounting equation will be balanced in such a way for such a way just like assets. Under the assets, one of the asset has been added, which is known as the inventory or stock. On the left hand side, under the assets column, one amount, one asset will be added, which is known as the stock. Similarly, on the other side, on the left hand side of the accounting equation means liabilities plus equity. On the asset side, we have added under the stock 10,000. In order to balance, right, accounting equation assets is equal to liabilities plus capital. So liabilities has been arises now. 10,000 creditors have been arises. Why? Because this purchase, this transaction is based on the credits. So we means here that asset is equal to liabilities plus equity. How to balance this equation? In the said example, under the asset side, one of the stock has been added amount of rupees 10,000, and under the liability side, creditor has been added 10,000, right? Plus equity, there is no equity, zero. There is no enhance, there is no increase, there is no increase in the capital, so it will be zero. So finally, the accounting equation, the double entry, as I told you just right now, every transaction is recorded twice. So two times here, 10,000 has been recorded in this case. So under the accounting equation, assets is equal to liabilities plus equity. Under the asset side, goods has been added amount of rupees 10,000. Similarly, under the liability side, one of the liability has been arises which is known as the credited 10,000. So now, if you are going to cross verify, if you ground, if you go for this totaling of both two sides, assets is equal to liabilities plus equity. Now 10,000 is equal to 10,000. It means this transaction is perfect. Now, with the help of this function, you can understand the double entry system. So, by preventing errors and fraud, it enhances double entry system enhances accuracy of the financial statement, which are what vital for analysis. As I told you just right now, double entry system means every transaction have two phases, debit and credit. Mastering this system is essential for anyone looking to understand or practice accounting effectively. So it is what, as its name just told you, double entry system means two. Balancing left is equal to right. Financial statement expense. As I just told you that the main task of this accounting is to prepare books of accounts. Books of account means what? As in my previous lecture, as I told you just right now, that journal entries, various ledgers, trial balances for mathematical accuracy, trading profit loss account to know the economical result, balance sheet to know the financial position. So in these financial statement explained, data visualization means financial statement are the language of the business. They summarize the financial health of an organization. Means when we're talking about this financial performance of the company, so by way of these financial statement, these we will come to across that what about the financial health. How much oxygen is required in the business? This capital. This financial statement going to tell you one thing, that what about the position of the company? What about the financial result of the company during a particular period of time? This financial statement will enable you. The key statement include under the financial statement balance sheet, which is prepared to know the financial position. Under the balance sheet, liabilities and assets are recorded, which have different classifications like current liabilities, current liabilities, fiscal liabilities, external liabilities, internal liabilities. If we talk about the assets, the right column of the balance sheet, assets, fixed assets, current assets, floating assets, tangible assets, intangible assets. What about the treatment of the preliminary expenses? How you come to know? By way of this financial statement, we will come to know. Other financial statement include income statement, which is also known as the trading profit loss account, which enable you the profit and loss of the company by way of uh, by the end of the quarter one, quarter two, quarter three, quarter four, and so on. So income statement is also prepared at the end of for a particular period of time. These two documents, final account means balance sheet and income statement, are the base the foundation of any organization, of any business, which enable, which clears telling you financial performance, the financial position, the financial health of a business. And also cash flow statement is an important part of these financial statement, which tell you what about the flow of the cash, what about the absorption capacity of the business for cash, and each serving unique purpose. Balance sheet also have some unique features, have some special purpose. Income statement have also some unique features and purpose. Similarly, cash flow income statement have also certain unique features. So understanding these documents empower stakeholders to make informed decisions, manage resources effectively, and assess performance. When we're talking about these financial statements, these all statements are prepared for whom? For the stakeholder, which enables financial, which enable to the stakeholder about the financial health of the organization. Why we are taking profit loss account in the balance sheet. If we talk about the Hindustan Unilever, if we talk about the Apple, if we talk about the Reliance company, you will always find they have a very sound health, very sound financial health of this company. Why? Because they manage their resources. Their books of account, their financial statement available on their website. So this financial statement informed decision is stakeholder can take the inform and can take the right decision, and you business can manage resources effectively and assess performance from time to time. If business think that if it is in the views of the businesses that our performance continuously downfalling, not up to the mark, not up to the mark, so they can take the necessary actions. चलो तुम लेक्चर दे रहे हो राइट क्लास बाद में करो, बच्चों को बोल देना। हाँ अटेंड नहीं करो। Every field, every field relies on this insight for transparency and strategic planning. When you're talking about this transparency, nowadays you can see the balance sheet, the financial statement of any company with the help by just clicking, single click, right, on Google, you'll find the balance sheet, the financial statement of every company, right, just a click, which ensure strategic planning, accountability, transparency. Every field relies on these insights, the transparency for transparency, strategic planning, and ensuring accountability. So the main task of preparing these documents, balance sheet, if you talk about the balance sheet, if you talk about the stating profit loss account, if you talk about this income statement or whatsoever the document, the main motive behind these all the document is to prepare financial accounting for the decision making purposes, which enable the stakeholder for a complete transparency, accountable, and stakeholder can make a strategic planning. So the financial statement means we're talking about the data visualization. Similarly, as I told you that every field have certain rules and regulations. The role of debit and credit is the heart of the transaction. Every transaction in accounting involves debit and credit, which affect different account in opposite way, not in same way. In my previous example, if you remember well, as I told you, purchase goods amounted to rupees 10,000. Purchase goods amounted to rupees 10,000 from XYZ Private Limited. Here, these transactions affect two different accounts in opposite way. One is assets are increasing, means under the assets, one of the assets known as inventory or stock, by 10,000 it has been increased. Similarly, opposite side, one of the liabilities amounted to rupees 10,000 under the liabilities creditors of 10,000 has been increased. Means the heart of the transaction, the role of debits and credit in these accounting mechanics, accounting system, just told you that every transaction affect two accounts. Every transaction affect two account, debit or credit, by way of debit and by way of credit. Just like purchased office furniture for 20,000 rupees. Here, in these questions, only and only there is an increase of assets, and the assets name is what? Office furniture amounted to rupees 20,000. Similarly, cash has been also been decreased. It's the same side under the asset side, but in opposite direction, one asset is amounted to rupees 20,000 has been increased. The assets name is what? Furniture. Similarly, cash is decreased by rupees 10,000, 20,000. Now, equation is balanced. On the one side, 20,000 rupees furniture has been added in the business. Similarly, on the same same side, amounted to rupees in the cash amounted to rupees 20,000 has been also decreases. So in the same side, it is balanced. One side 20,000 has been plus. Similarly, one other side minus 20,000 has been to added. So by way of plus 20,000 and minus 20,000 is now balanced. So this is what the role of debit and credits. Every transaction in accounting involves debit and credit, which affect different account in opposite way. Understanding how debit and credit work is crucial for accurate recording, record keeping, and financial analysis. Without proper debit and credit, it is quite difficult just to track the financial analysis, financial position of the firm. These knowledge help in tracking financial performance and making necessary adjustments promptly. Means by way of this debit and credit, by way of these proper knowledge of debit and credit, proper accounting standard, business can manage their business very soundly, effectively. It's foundational concept that promote accuracy across all the accounting practices. The most important task of these debit and credit that it promote accuracy. As just I now told you, on the date under the asset side, one of the assets furniture amount to rupees 20,000 has been added. Similarly, cash has been decreased by the 20,000. Guiding the principles, accounting principles, generally accepted accounting principles ensure consistency, reliability, and comparability in financial reporting. So these principles guide accountants in preparing financial statements that investor and regulator can trust. Understanding these principles is essential for maintaining integrity and compliance with financial reporting. To grasp these guidelines, fostering transparency and strength stakeholder trust. Means by way of these, accounting, guiding the accounting practices, right? So businessman, right, can take the right decision, and these based on certain fundamental principles, right? It consistency, reliability, and comparability in the financial reporting system. So under these is based on these fundamental principles of accounting is essential for maintaining the integrity and compliance in financial reporting. The importance of the auditing is no doubt. Once the books of account are prepared, once the books of account are prepared. So, the most important part that ensure the integrity. Auditing is what a critical process that verify the accuracy of the financial information and compliance with regulation. What about the rules and regulation, right, of the taxation, right? What about the rules and regulations of Indian companies, and it provides also assurance to stakeholder that the financial statements are free from the material misstatement. Means there is no any kinds of biasness while preparing the books of account. There must not be any kinds of it is free from any kinds of misstatement. So it is a task of the auditor just to ensure, just to certify that the books of account are paid with due attention, due due attention, with proper, with the proper knowledge of the accounting. Regular audit enhance credibility and can uncover inefficiency, promoting better financial management. By way of, from time to time, you need to businessman need to ensure that it has been duly audited by the auditors, right? And also it's going to disclose if there's any kinds of inefficiency or any kinds of misstatement or mismanagement, promoting better financial management. Being vigilant helps organization avoid pitfalls and maintain their reputation in eyes of the investor. By way of having quick decision, and if you are very vigilant and having a sharp minded, so it helps the organization avoid pitfalls and maintain reputation goodwill, right, in the eyes of the user. Just like nowadays we some named famed companies doing business across the world, just like Apple and BMW and many more companies which is named famed all the world because of what they have maintained the reputation goodwill in the eyes of the investor. I have if you talking about the taxation, like tax accounting basis means navigating the compliance. Tax accounting focuses on preparing tax returns and planning for future tax obligations. Without you don't have to violate the rules and regulations of the tax, right? By way of following the rules and regulations of the tax regulator, you need to businessman need to what uh, reduce the tax liability. These financial statement, these accounting, these are financial accounting will enable you just to maintain, just to make tax planning, how to reduce the tax liabilities. Understanding tax regulation is vital for minimizing liabilities and ensuring compliances with the laws. Means you should to understand, like, and minimize the liability and ensure compliance with the law. It's right. A financial accounting will also enable you will that how to investment, how to make the investment, where to invest, and similarly talk also about that CSR, corporate social responsibility, as well as sustainability. Effective tax planning can lead to significant saving and improved cash flow for the businesses. Based on these certain fundamental rules and regulations of this financial accounting, so effective tax planning can lead to significant savings and improve cash flow for the businesses. Means if you have sound system of tax planning, so by way of this you can improve the cash flow for the business, right? Similarly, you have a very major amount of saving by way of effective tax planning. You don't have to avoid the rules and regulations, right? You have to follow the tax laws, right? You don't have to go for ultra violet the rules and regulation of the tax, right? Or tax, you don't have to go for tax avoidance, tax evasion, but tax planning and tax management. So by way of these, right, there's also accounting provision for the tax accounting. The tax study talking about align with broader financial goals, making it crucial for all business success. Right. Nowadays, it is the era of AI. You can't escape, right, your fundamental duties, right, of filing taxes. Now government have very strict rules and regulations, very strict uh, punishment for if you violating the rules of taxes, right? And it is a complete as per the digital India, right? Initiative, everything is what digital. If you are sound in terms of your tax policy, that how to save the tax, how to reduce your tax liability, how to make a lot of investment, how to make how to work towards sustainability, talk about the corporate responsibility, right? So tax is aligned with the broader financial goals, make it crucial for means overall your business will be flourish success. Similarly, cost accounting have also very significant role. Means it helps businesses to determine the actual cost of the goods, product, or services, adding pricing strategies. Means based on this financial, based on this data, that you can decide right about your pricing strategies. That what about the what should be the prices of your products, and this insight enables organization to optimize operation and reduce waste on both micro as well as macro scale. By understanding cost, businesses can make informed decisions to enhance profitability and competitiveness. In the era of competition, you are not single player of manufacturing the goods as well as services. Talk about the services in case of Ola, and talk about the product, just like talk about the toothpaste, talk about FMCG sector, fast moving consumer goods, right? Take the example of these toothpaste like a closer, Pepsodent, Sensodyne, right? And many more goods are manufactured. So you are not a single player. It is a monopolistic competition. You need to minimize your cost to get a maximum profit. You can't increase the prices. If you try to increase the prices of the goods as well as services, customer is not switching. You don't have to increase the prices of the goods, but you have to control towards the cost. This cost counting will enable you to a strong grasp of cost counting, foster a culture of efficiency and innovation. With a human tendency, we want something new, changes, every time we want something new, it is your prime responsibility add something new, right? Make continuously innovation, right, in the good as well as services. So a strong grasp of cost accounting will fostering culture of efficiency and efficiency and innovation. The cost accounting has also very significant role for the purpose of decision making for a businessman. Now, if you talk about the budgeting as a tool planning for success, means in order to get a success, today you have to plan, and not only plan, but very sound planning is required for the purpose of decision making. So budgeting is an also essential financial planning tools that help the business allocate resources effectively, soundly to achieve the goals. Right? Well in advance, you have to make a financial planning, right? Strategies which help businesses to allocate, to manage, to monitor, to regulate, to supervise the resources soundly, effectively. So, ultimate goals of the business organization can be achieved. It enables organizations to track performance, engage the financial target, fostering accountability and informed adjustment. This budgeting will enable you that how to track the performance, engage the financial target, accountability and informed adjustment. Effective budgeting align departmental spending with overall strategy, ensuring every dollar spent drive values. Just to ensure that if you are spending 10 rupees, you are getting its 100 return back. It is a what effective budgeting which enable you empowering team with budgeting tools enhances collaboration and strategic focus within organization. Means if we have a strong team, team with full of zeal and enthusiasm, right? With budgeting tool enhances collaboration, there will be feeling will be developed of collaboration and strategic focus within organization. And ultimately, the result of these effective strategic sound team will leads to the flourishes of your organization. So, budgeting as a tool of planning for success. Today, you have to decide well in advance about the future course of action. Now, talk about now. Talk about the role of technology in accounting. As I told you, is a new era. New era of what? Technology. artificial intelligence, machine learning, virtual learning. Everything is possible in this present era of highly sophisticated technology. Means technology is also play a very significant role in the present era. So the technology is revolutionary accounting through automation, cloud computing, and advanced analytics, enhancing efficiency and accuracy. Software tools streamline process like invoicing, payroll, reporting, allowing accountant to focus on strategic activities. Most of the business organizations nowadays adopted various technology for the purpose of accounting performance, accounting tasks. Means it, every is there is smooth functioning of accounting is performed with the help of these technology for generating invoice, payroll, reporting, preparing financial statement, and many more things. So it is our it is a business, right? It is accounting is a technology which enable accounting tasks in a very sound and a very effective and a very smooth way. Embracing technology foster innovation and improve overall financial health of the for positioning businesses for future growth. Talk about the example of take the example of Dhirubhai Ambani. Once this company came into existence, Dhirubhai, it was the vision of Dhirubhai Ambani while introducing Reliance India Mobile that Dhirubhai Ambani haven't thought that the company will be on the company at it will be the time that when the company will be on the top. Now everybody talking about the Reliance, right? It have what brand a big star of the country have some you know one of the player of player in the international market of these technology. Similarly, staying updated with technological advance is essential for any accountant and business leader today. Accountant is it is the duty of the accountant just to continuously just learn something new. Be update yourself with the advancement of the technology, tools, and so on. So it is a responsibility of the businessman just to adopt highly sophisticated technology. Ethics in accounting beyond number. Ethical consideration in accounting are paramount as integrity affect reputation and stakeholder significantly. You don't have to violate the rules and everything. Pay the tax, save the energy, right? Don't violate the rules, don't pollute the environment, do your business by adopting the rules and regulations. Accountant holds a unique responsibility to adhere to ethical standards, ensuring transparency and honesty in the report. Understanding the impact of ethical choices enhances decision making and promotes a culture of accountability. An ethical framework strengthens relationship and support long-term business success. So, and ethical, if you're doing your business, right, with the use of advanced tools and technology, keeping in mind the ethical considerations. So you will have to very strong relationship with the society, with the stakeholder, and we support a long-term business success. Accounting for non-profit organization, as we have number of time passes towards unique challenges. Non-profit organization face distinct accounting challenges, focusing on the transparency, accountability, and manage donation effectively. Is an era of automation. The government now it is quite not impossible but quite difficult for government just to control each and every thing. So now number of non-profit organizations came into this stage. So unique challenges. So non-profit organizations face various accounting challenges, various financial suffering, and focusing on transparency, accountability, and managing the donation very soundly, charity effectively. Understanding fund accounting is crucial for non-profit organizations to meet compliance requirement and maintain donor trust. Effective financial management in non-profit ensures mission fulfillment and stakeholder engagement. Navigating these complexities requires specialized skill and knowledge tailored to sector. For the purpose of these, Non-profit organization. Accountant required have a very strong knowledge of these non-profit organizations. Ethical consideration. We required have a very good and very sound knowledge towards this. So beside of these all kinds of national and domestic issues, now is the era of LPG, liberalization, privatization, and globalization, where international accounting standard have a matter of the discussion. Means here global, you have to talk about the global perspective. Means you have to follow the international financial reporting, right? Facilitate transparency and comparability in global accounting practices. Understanding these standards is essential for organizations operating internationally, ensuring compliance and consistency. Adopting to IFRS open donor for global business opportunities, enhancing competitiveness on the world stage. Global accounting practices are vital in an interconnected economy, shaping investment decisions worldwide. Is the era of international accounting standard where most of the countries have adopted the concept of IFRS, International Financial Reporting, which facilitate transparency and comparability in global accounting practices. And these standard is essential for the organization operation internationally, ensuring the consistency and compliance. By way of this, adopting these IFRS International Financial Reporting, enhancing competitiveness on the world stage means you are a player of international market. You are the player of the international market, where you have to adopt various accounting standard for the purpose of sound reporting of these books of accounts. And global accounting practices are nowadays interconnected economy shaping investment decisions worldwide. Based on these, your financial reporting, businesses is nowadays taking the decision. Potential investor taking the necessary decision, the impactful decision either to invest or so the evaluation of accounting. A historical view means that we're talking about accounting has evolved drastically from primitive record keeping to sophisticated financial system that drive modern business. Understanding these evolution is essential to appreciate current practices and anticipate future trends in the field. Hmm? Historical insight provide valuable lessons and guide professionals in navigating ongoing changes in accounting. The journey of accounting showcases adaptability, innovation over centuries, reflecting societal advancement. We were talking about the continuously the phenomena of accounting evolving around the world. Financial system, modern business, drive the modern business financial system. Advanced sophisticated financial system drive the modern business. Historical insight provide valuable lesson and guide professional bodies nowadays adopting the concept of accountancy, and they are in their practices following the rules and regulations of the accounting for the purpose of bookkeeping, for the purpose of accounting, for the purpose of preparing financial statements. Based on this present era, we can predict the future of accounting. Clear insight, the future of accounting lies in greater automation. It's the era of AI, LPG, ML, automation, AI integration, and enhanced data analytics for smarter decision making with the help of technology, with the help of AI, right? With the help of data analytics, smart decision can be taken. Professionals must adopt to changing technology and regular landscape to remain competitive and effective. Means continuously technology, there is continuous improvement, there is continuous upgradation, there is continuous update of technology and regulator landscapes to remain competitive and effective. Sustainable accounting practices are trending nowadays. We talk about these save work, save life. Sustainability, we talk about the corporate social responsibility, reflecting the growing importance of the corporate social responsibility and ethics. In the coming days, the entire landscape will shift toward sustainability and corporate social responsibility. Most of the businesses are nowadays doing business on this planet. So you have to take into account the ethical consideration, the sustainability, embracing these trends in essential for organization, aiming for longevity and relevance in the market based on these fundamental principles of accounting. If you want to survive for a long term in the relevant market, in the relevant field, so you have to take into the sustainability. It's not motive of an organization just to take into account only and only for the business, for the profit, maximizing of the wealth, maximizing of the profit. No, also to look towards the gain inside the sustainability. So, based on this overall lecture of these accounts mechanics, if you have any questions, if you have any doubts or any confusion, you're most welcome. I am ready to answer all the questions related to these lectures. Okay, 24 into 7 basis. You may contact to me at 7618057190, or you may also contact to me at jnasir4 at gmail.com or jansari at iul.ac.in. So, from the deep of my heart, I express my deep, sincere gratitude to those who are watching this video, this lecture, for your timely patience, for your consideration, for your attention. Right? So, thanks, a special thanks to you for your attention, for your consideration, for watching these lecture, listening me actively. Thank you so much.